Good afternoon, everyone. I hope you're all doing well and enjoying your weekend. We are just doing a preview for the week ahead. So looking at kind of the key fundamentals, we'll take a quick deep dive into some of the price action on the charts as well and set ourselves up for the week ahead. Now, of course, last week, broadly speaking, was quite consolidated across the board. With very little happening in terms of developments within the markets. We actually saw the indices through the course of the week, particularly Wednesday, Thursday, and Friday, actually grind higher off the back of Powell's testification on ahead of both the Senate and the Congress on Wednesday and Thursday. This week, broadly speaking, on the economic calendars, a lot more data coming out, and we'll obviously go through that now. So I suppose Monday, starting off the week, primarily speaking, very little happening in the European session broadly, but we do have durable goods pending home sales coming out in the US on Monday afternoon. Again, so I suppose looking at pending home sales would be an interesting trigger, particularly when you've seen some of the interesting infographics coming out lately regarding drop off in home sales, higher mortgages, obviously with the higher interest rates and higher rental prices. So they're obviously looking for a negative figure on the pending home sales because they're obviously seeing pending home sales and home sales broadly, both new and existing, reducing because of the prices within the current market. So month-on-month figure is factoring in a negative 2% consensus. Now, the previous figure was negative 3.9%. So they're actually paring the losses back, or the estimations are that losses will be pared back by about 50%. But of course, anything above kind of 2%, if it's 2.5%, 3%, that's going to put a lot of pressure, particularly on the home sales figures, broadly speaking. So we're keeping an eye on that. We do have the durable goods orders as well, as we said, at 1:30. And Monday evening, we do have Lagarde speaking and Schnabel both speaking as well. So Schnabel had some interesting comments over the last couple of weeks regarding inflation, regarding interest rate hikes towards the back end of the summer. So again, in terms of forward guidance, we'll be paying close attention to updated commentary from both Lagarde and Schnabel on that. Tuesday morning, we do have German consumer confidence. So again, consumer confidence is reducing in Germany, broadly speaking, and that's actually factoring in across the Eurozone broadly. So 7 a.m. Monday morning, it'll be worth keeping a close eye, particularly on the Euro and the DAX, to, I suppose, get a directional bias, because again, if these figures are coming out worse than expected, that's only going to add a little bit more downside pressure on the market. So again, even though we close stronger this week, we have again a lot of important data to keep an eye on, and obviously speeches. So Tuesday morning we have Lagarde, Lane, Elderson, and Panetta all speaking between 9 a.m. and 12. So four of the kind of the big members in the ECB, and we do also have Bank of England's Cunliffe speaking as well. So again, looking for kind of information, kind of forward guidance, more on the kind of the fundamental side of the grander scale of the economies. So both Europe and the UK in tune on Tuesday. Again, Tuesday afternoon, we do have the Schiller home price indices. So this is going to factor into, I think, to a degree, the pending home sales. So you can kind of see Monday's pending home sales, Tuesday's housing price index, the Schiller home price indices. So we're keeping an eye on that. And of course, in our group, we will be circulating information once these kind of the pieces of data become circulated into the kind of the public domain. So again, we're keeping an eye on that, and of course that's just coming out before the open. So if these figures come out worse than expected, that could put a little bit of a dovish potential sentiment into the open as well. So again, being cognitive of that fact as well. And of course, just after the open, we also have US consumer confidence. So again, looking for forward guidance on that. Wednesday and Thursday is going to be probably the two busiest days of the week. So Wednesday, we have data in Japan, data in Australia. We've got ECB, Degundus speaking. We've got European data, business climate, consumer confidence. We've got Schnabel speaking. So the Eurozone will be quite busy on Wednesday morning. We have the ZEW survey in Switzerland. Again, factoring that in. Again, they're looking for an increase, a negative 70.70 reduction. Again, forecasting even tougher economic circumstances, and even within the Swiss, which is generally kind of one of the better financial, I suppose, performing economies. Now, in the US, we do have Mester speaking, we do have GDP, we do have PCE, or personal consumption expenditure, out as well. So we do have a raft of data out in the US, and we do have Fed Chair Powell speaking just before the open as well. So you can see how data at 1:30. Speaking at 2, we have the open then at 2:30. So this could again add for potential sentiment. Now, broadly speaking, if you were to look at last Wednesday and Thursday, when Fed Chair Powell spoke, he was honest, he was candid about the current state of the economy, how the Fed obviously got it wrong, and obviously looking at getting ahead of the curve to obviously correct some of this wider inflation narrative. Now, again, last week, what actually happened is the indices rallied. So again, the markets seem to like when Fed Chair Powell speaks. That's not to say every time he speaks, the markets will go up, but it's just kind of been recognizing of that element within kind of the broader markets. Now, on Wednesday, we do have Governor Bailey in the Bank of England speaking, and we do have the ECB Lagarde speaking. So you can kind of see uniform Powell, Bailey, and Lagarde all speaking pretty much at the same time just before the US Open. So if there's not something kind of to keep an eye on this week, if there's something to keep an eye on this week, should I say, it's going to be this. Okay, we've got England or the UK, we've got the US, and we've got Europe, all leading governors all speaking at the exact same time. Okay, so let's just wait and see. Let's just keep an eye on this to see kind of what happens, because there could be something. It's not very often you see the three different respective central bank members all speaking at the exact same time. So just be mindful of that as well. All right. Thursday, we have Japanese data again. We've got Chinese data. We've got UK GDP data. Again, that'll be interesting, particularly from the GILS, FTSE, and pound perspective. Okay, GDP, gross domestic product year on year, they're looking for 8.7%. So if that's coming short, let's say sub 8% or 8.5%, again, that's going to put pressure on the UK economy, because we've talked about the UK economy governors, broadly speaking, have spoke about this element of the higher inflation narrative, double-digit inflation narrative, and lower growth. So if we're starting to see that circulate into these figures on Thursday, that's going to put a lot of pressure into the London Open again. And of course, we have retail sales in both Germany and the Switzerland. We've got German unemployment just before 9 o'clock. And we have some other data coming out of Europe as well, both in Italy and the broader Eurozone. So again, Thursday morning is going to be a busy one. And of course, then Thursday afternoon, we've got, again, personal consumption expenditure, PCE data. We've got personal income. A lot kind of you would attribute to household expenditures, initial jobless claims. And of course, then we've got the Chicago Purchasing Management Index, or PMIs, as it's also known. So again, 60.3 was the last one, 55 is this one. So normally speaking, anything above on the PMIs above 50 is expansionary, anything below 50 is contractionary and recessionary. So we are still above that 50 threshold by some distance. But again, anything below 55 will put pressure on the indices. And of course, then finishing off Thursday, we do also have data in the Australian and Kiwi jurisdictions as well. Friday to finish off the week. Now, I know Friday is the 1st of July, but normally speaking, when the first falls on the Friday, they tend to do the second Friday of that month. And that's exactly what happens. So even though Friday is the first Friday of the month of July, we do not have the NFP figure. So the NFP is the following month. So this Friday, we have the ISM data coming out 2-3 p.m. Between 2 and 3 p.m. So 2:45 and 3 p.m. And we do have a raft of data out in Japan. So Japan's CPI figure. So that would be worth keeping an eye on. So Japan's figures is coming out roughly 2.1, 2.2%. The estimation. So again, worth keeping an eye, because if you start to see Japan's inflation starting to creep up, kind of 2.3, 2.4, that could make them potentially alter their, I suppose, their process of capping the JGBs, so the Japanese government bonds. And that is one of the reasons why the Japanese yen for the last probably 3 months or so has been so weak, because the Japanese central bank, the Bank of Japan, have been intervening in terms of the currency involvement, and have been capping those JGBs. So when you intervene, manipulate the prices, as a result, your Japanese yen will weaken dramatically. So that only means that on imports, Japanese yen are paying a lot more for their imports because of their weaker currency. So you might start to see something coming out in that. So definitely worth keeping clued in on that. And then as I speak then through kind of Friday, we've Canada Day and obviously in Canada. And then we've got some pieces of data out both in Spain, Italy, Germany, and the United Kingdom as well, with the broader HICP figures coming out in Europe. So again, our indices are kind of our consensus figures are there as well. So it's just a case of following them. I've synced up the tweet deck as well, so I'll be getting the latest information on hand as soon as it becomes available to kind of reconcile that with the price action as well, and obviously determine, is it good, is it bad, or is it indifferent? and then obviously rounding off that week in style. So that's pretty much it in terms of the economic calendar. When we look at the broader charts very, very quickly, the dollar still very much in this consolidation after that rejection of 105 on the dollar currency index. We broke through, we flagged back up, rejected this level very nicely at 105. Since then, over the last week or so, we've ground lower, but we haven't actually broken back through this kind of 103.80, 104 level here from this initial impulse. So again, it'll be interesting to see, does this dollar continue to slide? If the dollar continues to slide, that's going to help out the indices, broadly speaking. And of course, if you look at gold, the consolidation we've seen in the last week in the dollar has been also reciprocated in the gold prices, because gold had that massive sell-off, that run-up off the kind of the 1800, 1810 level. We creeped back into this 1850 handle over the last week or so. And since then, the price action has literally just drifted lower, or drifted kind of marginally sideways to that of the lower degree. But we are holding this 1820 level. So you can kind of see here, we've got a price action structure here, and obviously a third area of interest here. But at this moment in time, gold really, because of its choppy nature, hasn't interested me too much from a personal perspective. But again, just watching kind of the volatility within these markets, because again, gold prices have kind of come off in the last week or so, as too has the broader commodities like your oil prices has come off as well. So it's just important to factor that into consideration. As we look at the indices, as we kind of alluded to there, we've got all our kind of big six that we kind of tend to look at. So our S&Ps, our NASDAQ, our Dow Jones, our DAX, our Euro stocks, and our FTSE. So 2 in Europe, 1 in the UK, and 3 in the US. All 6 have broadly performed or done quite well over the last kind of couple of days or so. So here's the S&Ps first and foremost. If we look at daily structure, obviously massive. If we go full screen for a moment in time and kind of bring this up, we can see how the price action, structurally speaking, is continuing to create lows and highs. So we've got lows, highs, lows, another set of highs, another set of lows off at kind of an intermediate level down here from the end of 2020, beginning of 2021. So this was kind of the 2021 lows kind of starting off the beginning of 2021. You can kind of see there we've come down. We've kind of come back into the short-term structure here at around 3,800. We've actually broken through. And since then, the price action is obviously bolted higher on Friday, breaking through that level and continuing to push. So at this moment in time, the short to medium term progression in the price action is that the price action, logically speaking, is probably going to try and find its way back into this region up here. Now, whether that happens or not is another story. But as we look at the minute, we've taken out these short-term highs here. We've breached through. We're continuing to propel ourselves forward. So what you could see is maybe short-term highs, short-term lows, and a gradual flag back into this region, kind of like what we saw here to a degree, and what we also saw here to a degree. Price action flagging up, we get kind of short-term lows, price action goes higher, and then we get the end of cycle stage for the next phase of selling. Now, I suppose on the daily, price action is nice and clear. On the weekly, we're also quite nice and clear as well, because when you look at the weekly levels, nice area of interest down here around 36.50 or 36.70. Price action's broken back through, and we're just kind of testing those weekly areas as well. So you're kind of thinking, if the price action is going to continue progressing higher, we need to take through this kind of weekly area here as well to allow that deeper impulsive move back on the daily, back into these zones up here around kind of 4050 to 4100. But definitely speaking, here's our short-term area to the beginning of this week, 4,000, nice psychological round number, and then seeing kind of where does this next high form for the next corrective potential selling wave. So you can kind of see how the structure is playing out very, very nicely here at the minute on the S&Ps. Lows, highs, a very corrected, very clear trending price action. So again, just going back down onto the daily, you can kind of see that as well. So the areas I'm kind of looking at is this region up here. On the NASDAQ, again, similar kind of scenario. So on the daily, price action, again, corrective structure. I'm actually just going to go out of the full screen there for a second. We've got those lows and highs, corrective moves, impulses. Price action hasn't quite met this level of interest here around 10,800 to kind of 11,000. We actually kind of broke sharply just above 11,000 for the latest set of lows, and price action's rallying back up. So this is why I'm kind of looking at this region here around 12,500 at the minute. So 12, we broke through this kind of 11,700 level that I was kind of focused at last week, 11,750, and we've completely bolted higher. So again, we're kind of grinding higher steadily now. So it now becomes a case of, can the price action get back into this region? And that is kind of where my focal points is for the week ahead, particularly off the kind of the raft of data that we have coming. Again, and the 4-hour short-term highs have been taken out, price action grinding higher. So this region of interest is worth paying close attention to this week. Of course, Dow Jones, very, very similar scenario again, if we go full screen. So obviously bearish trend, lows, highs, lows again off a nice key level here. So this broader key level of interest that you're seeing in yellow is the pre-COVID highs, is the kind of pre-pandemic highs where we had this range of interest around 29,500 into 29,850. So you can kind of see it there. We rejected initially, then on the way back up, we broke through. There was a lot of weekly wicks kind of forming. Price actions rejected at that level again to a T, and has since kind of rallied back up. So that brings our attention down to the daily. Seeing the price action then take out obviously those pre-highs here at around 30,900. That was the kind of the first level of interest that we're kind of looking at. We've taken out this gap close here. So if we go down to the 4-hour, we can also see this gap that formed. Price actions taking that gap out, and we're continuing to grind higher. So at this point in time now, this region of interest up here, so if I just create maybe a liquidity area very, very quickly, this is kind of where I would be kind of focusing most of my attention on, okay? Liquidity area. So this liquidity area up here is kind of what I would be looking at, okay? If I was to refine that down a little bit more, between these two black lines is kind of where I would be kind of focusing on. So 32,500 is a nice upside target. As long as the bulls remain in control, this would be the area that I'd be looking at. Now, of course, again, looking at the broader markets over the last few weeks, the one thing that we do have to be is nimble, okay? And you have to look at the price action last week, very choppy, very up and down, until we bolted right through that short-term highs and took out this region, okay? So given that we've now taken out those highs, it now becomes a case of, can the price action now continue grinding up to the upside? Okay, so that rounds off the US. If we look at the DAX here very, very quickly, so the DAX is creating again very, very nice structured price action. So we had that impulse, price action rejected, then we bolted off from this region here, sold off very, very quickly. Again, another gap